Good morning. Welcome to the BloomBox Show, your go-to podcast for insights about industry leaders, experts, and entrepreneurs. We have a very special guest today, who's also not just leading the fintech content revolution, but he's also has a mark in research, entrepreneurship, and strategy. So give it up for Milan Bavishi, and he's the content director at Upstocks.
Thank you, Rico.
Yes.
Thanks for having me.
Welcome, sir. And we'll start with a very simple yet insightful question, which has also been a tradition in the BloomBox Show. So, what has a day in your life been like? Yeah.
Okay. So, see, frankly, I'm not like a 5 a.m., 6 a.m. person.
Yeah.
I like to get my full sleep, and the biggest motivation to wake up is that the market start at 9:15.
Yeah,
so
true.
that gets me moving. But after waking up, I do light exercises and breakfast, and then quickly tune into the markets.
Perfect.
So during the day, the day is largely filled with team meetings. We have discussion within our team members. There are webinars, seminars. I do host webinars and seminars. And apart from that, we do video shoot for the content that we produce regularly.
True.
And luckily, I've been the people around me are very kind, whether at home or at work.
Yeah.
The day goes good.
Yeah.
And every day brings in new challenges and also gives us an opportunity to solve those challenges and grow personally.
Okay. Yeah.
So that's the beauty of each day.
That is well said, sir. So, if you were to completely start again, from the first year of college, would you choose the same field? And if not, then what would you have been in? Which field you have been?
Okay, so if you tell me about first year of college and starting with what I'm doing, today, rather, I would again want to relive the first year of my college as I did at that time with all the innocence, curiosity, not knowing anything about the world, So that's how I want to restart and find my journey again.
Fair enough. So how did you get into research analysis first?
Okay, so it was pretty interesting. I had one of my relative took me to his friend who was in fund management industry, and now he's a very big fund manager. So he told me that why don't you join a broking house and start as an equity analyst? Then there is a career progression. So you start as an equity analyst, go on to equity sales, and then move to senior roles in the management.
Okay.
And, I was very fortunate that from college itself, from college placement, I got into a stockbroking firm called Anagram Stockbroking, and I joined as an equity analyst.
Okay.
Interestingly, there the business head, he's been a very important person in my life because based on his guidance, my entire, next 20 years, the journey has progressed. So, he used to analyze stocks based on fundamentals as well as technical. So fundamentals means where you study the company's balance sheet and, financial statements and all that.
Yeah.
And in addition to that, you also look at charts. That's called as technical analysis. So I used to observe him, and he used to come out with very good, interesting, stock ideas. And I started asking him questions like, how was he finding those interesting ideas, and those stocks worked very well.
Yeah.
So, and then he guided me, and then he was very kind that he also gave me permission, and he gave me leave from the office on several days so that I could go and learn outside. So, and, I joined BSc at that time. So BSc had a program, which was run by Dr. C.K. Narayan. So C.K. Narayan is, Mr. C.K. Narayan is, the OG, teacher in India who started teaching technical analysis.
Okay.
Basically, technical analysis is study of charts, price charts, right? So very fortunate to learn from him. And then, that's how, my journey towards understanding, companies based on fundamentals as well as analyzing them based on price started.
Perfect. Yeah. I think curiosity, that's the thing that drives the passion towards your interest, right? So, coming to that, what advice would you give to engineering students who would like to, usher more into this finance area?
In fact, based on my interactions with engineers, so like, we've done, college sessions at several IITs, NITs, and colleges like yours. So, I've realized that engineering plus finance is a solid combination.
It is.
Because, as engineers, you go through that grind, you work so hard and complete your engineering, and then it makes you very serious about the things that you're studying, what you are learning about the subject. So I think you can do as engineers and then studying finance. You can actually do very well because of the process that you've gone through. But what I would say to any engineer who wants to enter into, especially into stock market, if you ask me, that first learn how the market works. Understand what are the important aspects of the market, like whether it is research, whether it is trading, investing, and more importantly, how do you manage risk in the market.
Okay.
So first start learning at this juncture itself, and you have enough time. While you're a student, once you start your work, then you might get limited time, but as a student, you try to find out time, learn. There are several platforms, including Uplearn by Upstocks. So you can learn from these platforms and then start your journey especially in the stock market.
That's true. Perfect. So if I were a college student and I had like dispensable 10,000 rupees in my account, so what would you suggest? Where should I invest those?
In fact, I would suggest that invest that initial 10,000 in education.
Okay. Yeah.
Equip yourself.
Yes.
Learn about the markets, and as I said earlier, learn about how to manage risk in the market. See, stock market is a risky place, but there are ways to manage that risk. See, there is a difference between riskiness and risk.
Okay.
Right. So, riskiness can be managed, and risk you have to accept that there is risk. So once you are able to do that, you'll see that not just 10,000, eventually whatever amount of money is given to you, you'll be able to manage.
It gets consistent. Yeah.
Yes.
Okay. Yeah. So if you were also the founder of RW Ventures, so let's start with that. Tell us something about that.
Okay, so just before COVID, I was working with one of the big four EY, and it was a pretty interesting job. I was in valuation, so we used to value unlisted companies. And during COVID, I realized that why not, the markets were down, and why not start, my entrepreneurial journey at that point? Because see, it's always better to start when things are bad, because then what comes is, because everything is cyclical, markets are also cyclical.
Yeah.
So it's always better to start at a bad time so that you prepare yourself when the good time comes and you reap the benefits. And that's how, actually it panned out. If you have analyzed the market, they bottomed during the first wave of COVID, and then eventually they started rising. So with RW Ventures, what I did was I started with small cases.
Okay.
So small cases are basically, small baskets where people subscribe to them, and they get ideas of where to invest. So I was, very fortunate to be one of, consistently I was ranking in top small cases of India. And I had heard a saying called "Jo rachta hai wo bachta hai," especially during COVID, when businesses were shutting.
Yeah.
So one had to be creative.
Yeah.
So I was, I thought about it, like what kind of small cases I should start with. And, I started with very innovative small cases at that time. Like one of the small case was of Adani Group companies.
Okay.
And these were all concentrated small cases that I was developing. So another small case was about PSU stocks. So at that time, 4 or 5 years back, people were not even talking about PSU stocks. And next 2 years, there was like huge rally in PSU stocks.
Yeah.
So, the subscribers were very, very happy, and I saw very quick growth on small cases. And then eventually, I joined Upstocks full time.
Okay. Yeah. Fair enough.
Yeah.
So your experience in research and strategizing and development in content. So your perspective in that, how did you gain some values from it? Like, give me some.
Okay. So, if I analyze like last 20 years, I've been working, and, I've done different types of roles. So I was an equity analyst, then a lead analyst, then I moved to investor relations, did a lot of strategy in my first stint at Upstocks. and also did valuation at EY. So eventually, and then finally, I'm doing content and education now since last 4 or 5 years. So, I've done different roles, but all of these were revolving around the stock market. So, it's that, continuously the stock market is pulling me from different roles. And the beauty of that is each, job that I did, each role that I played at different organization, it taught me how the entire stock market ecosystem works. And, luckily that, understanding of the ecosystem is helping me every day to navigate through different challenges that we get.
Okay, yes, fair enough. So, how do you balance a fine line between promoting financial education and driving profits from trading activity, particularly when retail investors face the same significant risks? You know?
Got it. So, see, as I said earlier, education makes a big difference. So, if somebody just starts trading or investing in the market without knowledge, then the odds are very low to become successful.
Yeah.
So, my suggestion to anyone who is wanting to start trading or investing is first learn how the market works, learn how to manage risk. And so I talk about risk a lot because
Yes.
see, अगर वो आपने manage कर लिया profit, you don't have to worry because see, when we discuss all this, what happens is whenever you take a trade or whenever you invest money in the market, there can only be four outcomes.
Right.
One is you take a trade and you exit it and you make small profit.
Okay.
Second outcome is you make a big profit. Third outcome is you make a small loss. And fourth outcome is you make a big loss.
Yes.
Right? So let's say if you took a trade and you get a small profit, are you happy? You should be happy. At least you got some profit, right? Would you be happy if you got a big profit?
Definitely.
Definitely, right? So first two scenarios, you are good.
Yeah.
Third scenario is you get a small loss. So see, ideally, it should be okay to take a small loss and exit a losing position, especially if you are trading. Why? Because it is something like moving on,
Yeah.
That's what we do, right? If something does not work, we move on.
Move on.
So it's absolutely okay to move on in the market.
Take it as a learning experience and just, yeah.
Exactly. So, it's absolutely okay to take a small loss and move on. But what you should make sure is never, go into a big loss.
Okay.
So, see, out of 4 scenarios, 3 scenarios are in your favor. What you need to handle is the fourth scenario that आपको बड़ा loss नहीं करना.
Yes, that's the risk that you have to manage.
Exactly.
Perfect. So, how do you address the ethical concerns around encouraging trading, especially among young, inexperienced investors? So, because there are many risks, as you said, but there might be ethical ways to manage those risks.
Right. So, see, risk actually, if you see, there can be different types of risk when somebody trades or invests. If you just analyze, there can be, there could be political risk, there can be interest rate risk, there can be geopolitical risk, like, some certain countries like Russia, Ukraine war and all that. Or there could be crude oil risk, crude oil prices are rising, which is not good for India. So practically, if you see, there can be 10 or 15 different types of risk. But we as individual traders and investors cannot comprehend all types of risk. So then how do you, identify what is the risk and how do you manage it? So it's pretty simple, if you like to simplify things, like according to me, risk is your entry price minus your stop loss. Let's say if you enter at 100 rupees and you've kept your stop loss is a level at which you exit in loss. So if your stop loss is 95, whether it is interest rate risk, whether it is country risk, company risk or XYZ risk, if there is some problem, price might come down and you will exit at a 5 rupee loss. So that 5 rupees is your risk. Now, let's say if you can afford to lose 500 rupees, you buy 100 shares. If you can afford to lose 1000 rupees, you buy 200 shares. Okay. Per share risk is 5 rupees.
Yes.
So based on that, you define your quantity, how much you can afford to lose in the market. And based on that, you define your quantity. So once, somebody understands this basic, math, then automatically what happens is, as I said, riskiness goes out of picture.
Okay. Yep. Fair enough. So what are some unseen challenges that, fintech platforms face in India in terms of regulations and stuff?
See, regulations, of course, they are there to protect the investors of India. However, the unseen challenge, the biggest unseen challenge is how AI will, pan out. Like, and I'm very hopeful that it'll pan out in the interest of, all the players in the ecosystem. But that's particularly an unseen challenge because we don't know how quickly it will develop and how, it will, impact each aspect of the market, whether it could be, DIY investing or anything related to technology. So that is one unseen challenge that we have.
That's also the unseen. That's not even the unseen challenge. That's also a challenge in our engineers also. Ki if AI will make us lose our jobs or just take up our jobs or something. So that is something that I'm glad to hear. Ki it has a conversation in your area too. What's the one thing about trading and investing that most people get completely wrong? When they start their journey.
Again, it's about, risk, how to manage risk.
Yeah.
See, it's very easy to find which company should I trade or invest in. You can study, you can watch TV, you can talk with friends, and you will get a stock, at least 2, 3 stocks that you should invest or trade in. But once you take a trade, how have you, calculated your risk is very important. And also, see, we must understand, to become successful, you have to pay a price. So, for example, in cases of a stock, let's say you buy a very good stock, but if you buy it expensive, you paid a price for it, some extra amount for it. Let's say it's a very good company and the stock price has come down, and you bought that company, you might have paid less price, but you are in essence paying in terms of time. Why? Because it may take 2, 3 years for the stock to rise because it has come down significantly. Not necessarily every stock, bounces up very quickly.
Yes, true.
So in that case, you are paying in terms of time. So you always pay a price. So either it could be in terms of money, or it could be in terms of time. And whether it is money or time, you always pay in terms of emotions, because after you bought a stock, there is a flow of emotions that goes with it. Unless you are able to manage those emotions, which is very difficult for us.
It's like a continuously going on movie that you have to see. कुछ ना कुछ तो होता रहता है. Stock up down चलता रहता है. Yes.
As soon as you look at the price ticker, that emotion.
Exactly. So, what do you value more in your area, your education or your skill set that you've developed over working for, Upstocks and in RW Ventures?
Correct. So, see, frankly, to be very honest, I value the skill set that got developed on the job. I value them more than the education that I took. But most importantly, during my education days, I got my besties.
Okay,
and those are my friends for life.
Yes.
So that way, education days are very important.
Not to even forget the personal aspect of education, and even in your work, I think you must have developed many of the peers that you've met. Exactly. So I'll ask this: what is the one thing that you see shaping into the future of finance and trading? Some bold prediction, if you can give me.
Yeah, so it's not a prediction, but I do have a personal belief that with AI, each and every service will get hyper personalized. So whether it is Milan, whether it is Rekhav, you will get, whether it is recommendation, asset allocation, it will be very, very personalized to your risk appetite, your capital, your emotional intelligence and all that. So it will be hyper personalized, and that will be possible with technology.
Okay,
that is one thing that I foresee that it could come into in future.
Okay, yes. Before wrapping up, I think I'll ask just one last question. If you have any kind of advice, I think you've given enough, but any kind of unique advice that you would like to give our young and budding viewers. So
I would say, if you're young, budding, and you are just entering the stock market, learn. Because maybe you spend like 1 or 2 years in learning, but next 50 years, you'll do so well whether in investing or trading, whatever your choice is.
Okay, yes. Well said. Thank you, Milan. We would love to have you here as the speaker, and we look forward to having more sessions of Upstocks with you in the college itself. And yes, thank you. Be sure to follow Upstocks as well and Milan sir here. Subscribe to the BloomBox Show. Thank you.